Welcome, everyone, to another Compliance Corner. And in fact, this is the last Compliance Corner of 2022. So as always, these videos are designed to bring you updates in the world of compliance on a monthly basis and focusing in on those newly released items to be aware of from the previous month. So without further ado, why don't we get into what we'll be covering in this video? So I'll just bring you over on the next slide here where we have a summary. And as you see, we've got a few different items for you here. First, we'll be talking about the recent technical amendments to the HMDA thresholds and a bit of background on that. Then we have some updates to the HELOC booklet, FDIC revised guidelines for the appeals process, some loan limit adjustments for FHFA and FHA programs in 2023, CRA asset thresholds for the new year, as well as the 2021 data that was recently released, the OCC and FDIC CRA exam schedules, another delay for real IDs, a quick note on the Wisconsin 2023 escrow rate, and then the newest rule in FinCEN's process for working through the beneficial owner changes. So with that, I will turn it over to Heather to kick it off with our first item.
Thank you, Scott, and welcome everyone to this video. And we did want to update the listeners to a number of items that have been issued since the court case that had concluded in September of this year, that CFPB's threshold for the reporting of closed-end mortgage loans was lowered. So since that court case in September, there have been two items that have been issued, and the first being a blog post that the CFPB posted on their website early December 6th. And basically what was said in that blog post was that they recognize that small institutions who are going to be impacted by this rule are our smallest institutions, and that the CFPB was not planning on going backwards in time for any type of enforcement activities, but basically was setting the stage that it should be something prospective in nature. It was kind of cryptic in how they said that, but that's how we've been taking that particular blog interpretation. And then after that blog release, CFPB actually did file with the Federal Register to have it published in the Federal Register just this morning, the 21st of December, a technical rule which actually does make changes to the Code of Federal Regulation to actually in Reg C now specify that the reporting threshold for closed-end loans is the 25 closed-end mortgage loans, no longer the 100 closed-end mortgage loans. So we are dealing with the 25 threshold, loan threshold. So that's in statute. That is the direct requirement now that we're working with going forward. And has been WBA's perspective since the court case that if you are a small institution that has been impacted by this change, where it was previously 100 and now we're down to 25, and you were in that gap period, that if you have had 25 closed-end mortgage loans in the year of 2021 and in 2022, that you should expect to be filing your HMDA data now in 2023 as you go forward. We have had informal conversations with the other prudential regulators asking for them to provide further guidance, such as what is going to be their examination expectation. Is it going to be immediate? Is it going to be a little bit of a grace period? We're still working through that, and we will certainly share that information as soon as we are hearing about their takes. But we've certainly alerted the federal regulators about the importance of having guidance be issued and there being some patience by those federal regulators. So stay tuned, but we did want to make sure that you were aware of those new developments and those new issuances. We do have those links available as part of this video. And as further resources, be sure to check out the past October Compliance Journal, as well as this month's Compliance Journal, as we've written about this particular topic, but wanted to talk about it here today. So with that, I'll turn it over to Scott for our next topic.
Great, thanks, Heather. So just a quick notice here, CFPB recently updated its HELOC booklet, and this is now immediately available. So this is the booklet that's given out at time of application, the what you should know about home equity lines of credit that's required by Reg Z. And within Reg Z, being required to give this, banks have the option of either using CFPB's booklet, which they've always provided, or your own if there's a different option, be it what your vendor has. But CFPB has now updated it. So if you're looking to use this revised booklet, CFPB has a few options available to you. You can find the notice of availability, so the link to the actual notice that CFPB published and the update, as well as links to all of the booklet types. And what you have is a print-ready version that you can just go online and print right off and start using, or a web-enabled version, depending on how you want to modify or use that within your own software. And you can order print versions as well if you just want to have those sent through the government printing office. CFPB has all those resources available depending on the type that you want, including both English and Spanish language booklets available if that's an option that you provide, depending on the type of customers that you do business with. So again, both of those are in the link below. What you'll find in the description is it takes you to a CFPB resources page. You're just going to want to scroll down to the bottom and you should see those booklets right down there. So just a quick update on that. I will pass it right back to Heather.
Thanks, Scott. And before I go on to the next topic, I did want to just kind of make a pitch too that while the CFPB just issued that booklet, give your vendors just a little bit of time to get that incorporated into any particular type of operating system. Certainly, WBA's subsidiary FIPCO is well aware of that new available tool. They're currently working with the new 2023 threshold adjustments and other types of programming they're trying to get out there. So as Scott mentioned, those resources are separately available from the links that we provided, and know that your system providers are working on it, and to be a little bit patient with getting that out to you, but know that you can pull those directly from the links provided by Scott. So just wanted to add that extra little nugget there. So our next topic in our video is to make sure that you are aware of revisions that were recently made to FDIC's guidelines for appeals of supervisory determination. So this is in essence your examination setting. And if you are in an examination and you are having concerns or taking issue with what FDIC has come to a conclusion of within their examination, there are new procedures for banks to have that outcome looked at through the Ombudsman's office. And so this is a new appeals process. It's going to allow for the ombudsmans to be more involved in the discussion from the bank on behalf of the bank back to FDIC staff. So certainly be aware of the changes. They are helpful changes. They are meant to make sure that all information is being shared with all parties, as well as that you have an opportunity that when you've asked for a review by the Ombudsman's office, you have the opportunity to ask for your division director through FDIC to stay what is currently been the ask within an examination setting. So that would kind of toll what the request by FDIC or what action item you would have to be taking until the appeals process can actually be worked through. So that would be something that you would want to make sure that you know that you have that opportunity to ask for. And with that ask opportunity, FDIC will make a decision on that and will provide you with information as to why the stay had been granted or not. But this certainly is a tool. We know from the calls that we're on that there are frustrations by banks in their examinations with FDIC. And sometimes their banks feel that maybe they don't have a voice. Well, here is an opportunity for a new voice to have a separate panel, take a look at the findings, and hear what the bank has to say, and for the ombudsmans to try to help facilitate that. WBA, Scott and myself and others here, we do have ongoing conversation with our ombudsman's contact, and we really do want to make sure that you're aware of this opportunity to have your voice be heard and with information being shared. So with that, we have the link provided for you for that revised guidelines. And again, please be sure that you're aware of those opportunities should you need to act on those. Scott?
Great. Yeah. So another quick update here. FHFA and FHA, as you can see on the slide here, have announced the new loan limit values for their programs in 2023. And so to start with FHFA, the 2023 value for one-unit mortgages, those mortgages acquired by Fannie and Freddie, the GSEs in 2023, that will increase to 726,200, up from 647,200. And then just in the bullets down below, you'll see for FHA's single family Title II. So we have two programs here. The Title II Forward program, those amounts have increased as well. And you can see the adjusted floor and ceiling amounts depending on the property size right on the slide here. So I won't read those off. But then for FHA's home equity conversion program, the loan limits for that will increase as well. That's going from 970,800 to 1,089,300 in 2023. And so again, we've got those amounts on the slide condensed for you there, but within the link in the description below, you can go directly to their respective pages, read some more about those programs, and see the increases that apply there. I'll hand it back off to Heather for some CRA items.
Super. Thank you, Scott. So yes, indeed, we have some year-end and forward-looking data. So from a year-end perspective, FFIEC has released past data. So for those of us that track that data and use it as a benchmark, we have 2021 CRA data that was just released here February 15th, and it deals with the small business and other community development farm data that we like to use to understand the past activity. But more importantly, going forward in time, we have a 2023 asset size thresholds just released by the agencies last couple days. So for those of you who are a small bank, that now means that you are an institution that as of December 31st of either of the prior 2 calendar years that you had assets of less than 1.503 billion. And for the intermediate small bank, that is going to be those of you who are small institutions that have assets of at least 376 million as of December 31st of both of the prior 2 calendar years, and less than the 1.503 billion as of December 31st of the prior 2 calendar years. So we've seen an increase in those numbers thanks to the consumer price index is adjusted to inflation, but we wanted to make sure that you had those thresholds right away as we head into that new year. Scott?
Great. Just 3 items on this slide here for you. So the first one, real quick, still on the topic of CRA here, OCC and FDIC have released their 2023 CRA exam schedules. So you can find that for the first and second quarters directly in the link. Then the next item immediately below that, you'll see that the Department of Homeland Security has extended the Real ID enforcement date. This is now 24 months forward. So that will be in May of 2025 now. So looking a fair bit forward, but the Real ID, as you're aware, is a new type of ID that the states are required to implement. And then for various things, everyone is going to need to look to get one depending on what they want to do. So for flying, for example, would be a requirement in many aspects where a Real ID might be required for individuals. And so again, the idea here is to allow more time for implementation, get those who need to get those identification cards ready, get the states up to speed with the new standards. So from a Wisconsin standpoint, DOT has actually been on top of this, and even prior to this announcement had been ready to roll out Real IDs. And so on their webpage, which is also up to date currently with this new delay here, you can find it right on there. And so Real IDs were ready to roll out. And so, for example, you might see a star in the upper corner, which would mean that that had been a Real ID through the DOT process. So again, you can find the link to the Real ID deadline and directly on DOT's page. They've got a good up-to-date source of information on that if you're wondering where Wisconsin is at with that program. We've also been able to confirm, this is our last bullet point on the right of the slide here, with DFI, that the 2023 escrow account interest rate will be 0.11% in 2023. And this, of course, being for loans that are still covered by 138 based upon origination date. So we wanted to have that by the end of the year for you, and we are able to confirm that rate. So with that, I'll turn it back over to Heather to bring us home.
Thanks, Scott. I will just mention too on that escrow rate that at the time of this video, DFI did not yet have that link right on their website, but they hope to have that yet here before the end of this month. So where you would normally find their notice on their Division of Banking website, you will find, hopefully here very soon, the 2023 notice, which will mirror what you've seen them previously released, but it certainly will have the new interest rate as well. But as Scott mentioned, we are wanting to finalize this video on the topic of a new proposed FinCEN rule. So as we have talked about previously, there are in essence 3 rules that FinCEN needed to issue as it relates to the beneficial ownership requirements of collecting data, hosting data, and sharing data. And so this is Rule 2 out of the 3. And it was just published on the Federal Register earlier this week. And we've got a period of time until mid-February to collect comments and be providing FinCEN with comments. We will be doing that. So if you have particular comments about this proposal, once you've had a chance to read it and digest it, feel free to reach out to Scott and myself. We'd be happy to talk about it. But in essence, what it does is this is a proposal that is meant to address how information that has been collected and shared with FinCEN as it relates to the beneficial ownership rule, how that data is to then be shared. As you can imagine, it's very sensitive information, both about the reporting company and about the individuals. And so FinCEN, as well as I would have to say our industry, we want to make sure that that data is well protected. And so this is FinCEN's proposal for how they plan to share that collected data. So we have the proposed protocols about the security and the confidentiality of the information that is going to be included in that. This is directly from the Corporate Transparency Act requirements, and they're meant to protect the personally identifying information, or PII. And what the proposal has clearly said is that there will be certain agencies that FinCEN will be allowing to have access to the data. And I think there are areas that you would suspect would have access. So we're dealing with federal agencies, state agencies, foreign government agencies. Those are who are tasked with trying to combat bad actions within the financial world and otherwise relating to money. And so they need to have those agencies need to have that kind of activity in order to stop any kind of bad actions. But there's also going to be a need by banks and by our regulators and by Treasury themselves that when we are trying to comply with our customer due diligence rules, we need to have access to some of this information that's been reported by the reporting agencies. And so how that access is going to be given and how we request for that access is something that's set forth in this particular rule. And so, for example, as proposed, if you were a bank and you're wanting to complete your customer due diligence on your new business customer, and your business customer had reported information already to FinCEN's computer site database as it relates to beneficial ownership information, we would have the opportunity as a bank to obtain a written certification or statement from our customer saying that they give us the authority to pull that information from FinCEN's data, and then we're using it for their purposes of customer due diligence. So that's just one example of what would be many different. It's just the initial proposal that we're working through. But we wanted to make sure that you were aware that the proposed rule is out there, so you can try to read through it when you have a spare moment, conceptualize how that may well impact your operational duties when this comes forward, and we would be using the system, as well as to identify some pitfalls. And I would argue that this is probably going to be, I wouldn't say burdensome, but because of the data they're trying to protect, I do think that there's going to be some cross your T's and dot your I's types of formats in order to gain access. It's not going to be super simple or just click boxes. So I do think there's going to be a bit more teeth to that operation, but stay tuned. Reach out to us to comment. We're happy to talk through it, but that just came out and we'll be commenting here by February 14th. So that's all I wanted to cover on the FinCEN proposal. But as we always like to do, we always try to stress, please be aware of the resources that Scott and myself, Katie, are creating for all of you compliance folks. We have that posted on our website underneath the compliance resources. They are updated. We'll be posting the escrow information here just momentarily as we now have collected that data, as well as other new resources are going to be posted yet this month to our website. Also, please don't forget that we have the best practices library. We also have some great consumer-facing resources on our consumer page that if you have a banker who's working with maybe a difficult customer or someone who's not quite understanding, or you're wanting to train some new staff or train some persons in your marketplace, know that there are consumer resources out there for your use as well. And we're always happy to take recommendations and ideas of what you would like to see for yourself to make your jobs a little bit easier. That's what we certainly try to do here every single day. Compliance hotline, call us. We are always here happy to answer your questions and talk you through something. So as you've seen through all of our slides and our publications, feel free to reach out either in email or by phone, but we certainly appreciate all of you and hope that our resources are helping you guys be more successful and being more efficient. And we certainly appreciate you guys joining in for our last several months worth of this Compliance Corner video. And we look forward to offering more in our next year. So Happy New Year to everyone, and we'll talk again in 2023. Take care.
Everyone, we'll see you in the new year.